In this screencast, we are going to continue with our variation on problem P1-4B from a Financial Accounting 8th edition by Weygandt, Kiso, and Kimmel. And in this particular screencast, we are going to look at what we do with all of these journal entries that we created in the last screencast. So we have everything in our general journal here, and it makes it easy to look and see what the transactions were that happened during the month of May. We can see that we invested cash for stock through our explanation, and we debited cash and common stock. And it's easier than looking at this huge table and just seeing numbers and not knowing what they go with. The problem with the general journal, though, is we don't have the balances in any particular accounts. We can look over here and say, oh, at the end of the month, cash is $17,700. We can't look at this general journal and see that at all easily. So what we do next is we post all these journal entries to the general ledger. And the general ledger is all of the accounts. We have different accounts listed here, all of our asset, liability, and shareholders' equity accounts. But it's all the accounts maintained by a company, and they are numbered. And I have created those particular general ledger accounts over here. And so now we're going to look at how we post to the general ledger. I've created all of our different accounts. We start with cash. Cash is always first. We give it a number of 101. It could be 10, it could be 1, but it'll be in the 100s. It'll be the first one. Then we've got our accounts receivable, supplies, equipment. This is all in balance sheet order, or our accounting equation order. So I already put the dates in again to speed things up a bit. And what we do when we post from the general journal to the general ledger is we look at our different journal entries and we move them over, and then we have a running balance in all of our different accounts. So for our first journal entry where we debited cash and we credited common stock, what we would do is we would transfer that over. And cash, we would debit for $8,000. Wrong spot. On the first, and that increases our balance. Our balance is now $12,000. And we would put a reference, and our reference is J1 because it comes from General Journal 1. And we would reference it over here that it went to account 101, and now we know it got recorded. That tells us we didn't screw anything up. And we would go over to common stock, and we would credit that for $8,000. Again, it comes from Journal 1, and we can put down that account 300 has been posted. And we will do that with all of these journal entries. So our rent expense of $800, we would go over to rent expense. We would debit that for $800. Oh, I put that in the wrong place. There, now it's at $14,000. So we put our rent expense in here in account 605, and we would put 605 in here so we know it was posted. Cash was credited for $800. We would put that here, J1, and cash is account 101. Our supplies increased. So we would go down to supplies, we debited that for $500, and the reference is in J1. And supplies, the account number is 125, so we can put that there. Our accounts payable, we credited for $500, so you'd go and you'd find accounts payable, here it is. That's credited for $500. Again, we've got a reference number of J1. And accounts payable is 210, account 210, and so we would record that here. And we keep going. Advertising expense is account 610, so we would go over there and we debit that for the $50. And we would put in our J1. And our cash, we will post J1, and that was a $50 credit in account 101. And we continue this journal entry on May 9th. We have a debit of $500, and so we have a debit of $3,000. And so we would put that in there. And our service revenue account is $400, and we would put that as a credit. Dividends, we can see the dividends are account $350, and we debited dividends for $700, and cash is $101, and we credited that for $700. And again, we should have, to make this go a little faster, oh, no, that won't work. We can put all our J1s in there quickly. Then on the 15th, our accounts receivable went up by $3,300, so we would put that as a debit over here in accounts receivable in J1, and that's account 110. So this is how you post all of these different journal entries. Our service revenue, we have another $3,300 in service revenue. And we need to make sure that we have our references in there so that we know this was taken care of. Our salaries expense goes to account 600, and we debit that for $2,100. And that was a decrease in cash of $2,100. On the 20th, we had accounts payable of $500. That's account 210. And we debited that. So we debit that there. And we credited our cash for $500 on the 20th. On the 23rd, we are debiting cash for $2,000. And we are crediting accounts receivable for $2,000. On the 26th, we've debited our cash, and so we can debit that again. And we are crediting notes payable, and our notes payable is account 200, so we would credit that for $5,000 and write down which journal it came from. Our office equipment is account 140, and that office equipment was increased by $2,300, and our accounts payable were also increased by $2,300. And so we would increase that here. And finally, our utilities expense, account 615, was debited for $150. And we would put in our reference, and our cash was credited for $150. And what you can see, if I now hide this, is that these final balances match the balances along the bottom here. And they will for all the accounts. So now we have them in the general ledger, and you can see I did a subtotal $3,100 for our expenses. And this can now be used for our financial statements.